traders, Gary Wagner here, approximately 11:20 in Honolulu, 5:20 in New York City. The precious metals markets are closed for the week. It is Friday, the 18th day of May, 2012, and this is the daily report for gold and silver, our weekend review. Very, very nice, strong finish after a strong showing yesterday, with gold trading up almost $18 on the day. Kitco has it at $15.93.10, the low $15.67, and the high $15.98. Silver up about 67 cents, $28.82, with a low of $27.73 and a high of $29.05. Of course, yesterday we talked about the fact that we had really a triple punch. We had safe haven buying re-enter the market. We had buying the dip mentality, bargain hunting, re-enter the market. We had a fear, or a renewed interest, I should say, concern that the Federal Reserve in the United States would in fact begin another round of quantitative easing, QE3, that wasn't off the table, and it was something that we might see implemented within their stimulus program sooner than later. Just the mere hint and belief that QE3 could resurface sent the dollar, which had been in a major uptrend, as you can see here, really from the latter part of last month, and you can see our first real potential reversal. I think this might in fact be a top and a key reversal. We'll talk about that in a second. When we convert this chart to our Heikin Ashi, it looks a little bit different, but what is most apparent when we look at this chart, of course, is the fact that after this long succession of really solid green candles, you can see this really strong reversal in the marketplace. Traders, we are looking at a daily chart. This is of June gold off of the COMEX. And there's two things that we want to point out in this chart. I'm going to line it up a little bit better in a second, but the first of which is that absolutely, positively, without a doubt, this week we broke below this really long-standing trend line, this support line that was established really back in 2008. And as you can see, it lines up quite nicely to a couple of lows that give it good validity. Here, it's a little bit above here, but right in here, this low, and this low really are indicative of a market that's holding support in that area. We broke through that. There can be no doubt about it. But when we blow this up, and this is in straight candlestick format, you can see how strong this turnaround was, and it does appear as though it's headed back into the channel and back into the triangle. Now, when we move from a daily chart to a shorter term chart, this is 432 minutes. Again, we are looking at gold, but this is the spot month, or cash gold, as you can see up here. But you can see really the strength that we had over the last couple of trading days as we watched it trade off a low just above 1520 to move up roughly $70 to close near $1,600 on today's trading activity. The $18 close higher today and 30 plus yesterday. Now, traders, when we convert this candlestick chart to a Heikin Ashi chart, you can really see a couple of things. First of all, it's obvious where we had a key reversal. You can see that reversal right here. The market comes down. We get really what we look for on key reversals, which is a really small body size candle, a doji-like. A doji is where the open and close are almost equal. And from that pivot point, we go from red, of course, then move over to green. The other thing that we should notice on this, or take note of, I should say, you have the absence of tails, except for a little tail here, and you have really strong body sizes. And what that means is the trend itself, one, has some real dynamic strength, and two, it is in fact strengthening rather than weakening. You know, on yesterday's show, we talked about a double bottom in gold and a possible triple bottom in silver. And we used a couple of different charts. I want to first kind of look at the gold, and to do that, I need to really compress this data a little bit so you can see what I'm talking about in terms of potential bottoms in this marketplace. Now, the first thing is, when we look at this, this is a mistick. 1520 was the actual low right in here. And when we take a look at this particular area right in here, you can see that there is some real relevancy and some real technical data that shows lows in this area. These were just wisps, because if you turned your head, they were gone. But you can see these sets of lows and a matching low right in here. And of course, this is in the gold market. The other interesting pattern, and this is on a weekly chart, that I think has incredible insight, is the fact that as this market traded down, you can see this is that break below the strategic and this our long-term support area. But this particular candle that we're looking at right in here, this candle right in here, it can be called a doji, or more appropriately a hammer. And a hammer is a very significant candlestick pattern to find. Now, on a weekly chart, as the hammer comes down, you would get confirmation. Now, confirmation would mean that in this next week's trading, we're going to get a green candle with a higher high and a higher low. And traders, however next week plays out, I have to tell you that this particular candle type, especially in a weekly chart, is going to be interesting when we see if there's follow through next week. Because when you look at the composition of a hammer, and what it is it's not so much the body size in the hammer, it's the fact that this tail is a minimum of 2 times the size of the body. Because what it means is it opens, and then the market is traded to a substantially lower price. But at some point, as they drive this market down, buyers come back into the market, and in fact, it closes very close to that opening point. That's what's significant, is how strongly it comes off of those lows, and the longer the tail, the more significant the hammer. I want to take a look at silver for a little bit, because we talked about the fact that we had that series of bottoms in gold, and we talked about the fact yesterday that we were probably looking at the same thing in silver, and that's why we issued the buy signals, the buy triggers last night. But as you can see, these lows here, we came very close to it. No cigar, but it was close enough to track, as I thought, a potential triple bottom. Looking at a daily chart, July silver. Look at the Heikin Ashi turnaround candle. We absolutely have it there. Now, when we go and blow this candle up, what you will see is, as this market came down, right in here, we did get a smaller size candle. These candles are a little bit overlaid on top of each other. There's a small red candle, and then our pivot reversal candle right in here. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.